Okay guys, in this video I'll tell you a story from yesterday, and that's pretty common, and that will teach you how you can maintain your tracking authority in the tough times. I know that happens to everybody, whether it's because of not being able to find new loads, because it's slow, because their track breaks down. I mean, things happen. Obviously, in our business, things happen all the time. So I'll just give you two stories from yesterday with a couple of clients. So stay till the end, and you're gonna learn what we did for them to basically weather through their financial situation and through the times while they're like. Looking for the right equipment, the right truck in one of the cases. In the other case, the customer had concerns how to pay less, basically for their insurance while it's the low season. So let's start with the first one. So the first customer, his situation basically is he got going, right? He got going. We got his authority activated and everything. We found him like a pretty competitive rate. Now the problem with him was a month and a half in. He had like basically hard time like finding loads with the equipment he has, and that equipment wasn't even his, right? So he even had to return it. So at this point he already spent the money for insurance to get going, to activate his authority. He spent the money for compliance, for the FMCSA and all that stuff, and basically he had two choices. Choice one, to just basically shut down everything and cut his losses and give up on that, and maybe restart at a later date, and just basically losing, I mean, literally like thousands of dollars for that, for those almost couple of months. Or the other option was to get creative and figure out a way how to maintain things and buy him some time till he figure out his equipment. So what we basically did for him, since he returned the vehicle from where he leased it from, it was basically a set of a pickup and a trailer. We replaced that with a personal vehicle he has that he just decided he's going to use for business purposes for the time being, until he finds an equipment. Now in that case, the savings on the insurance end weren't like tremendous, right? We were talking about maybe like 20 to 30% reduction in his payment. I mean, for the pickup, it was already like pretty low cost policy. He was paying probably in high 500s, and then we got him to high 300s with his personal vehicle. Obviously, in that business, he can only do limited things with it. But the main thing with that personal vehicle, is he has a vehicle on the policy, so the policy stays active, and therefore the filings with the FMCSA stay in place. In this way, his authority keeps seasoning. So this way, once he finds his equipment, where it's going to be his another pickup, box truck, whatever it's going to be, and he replaces that personal vehicle with that new equipment, he'll have some history behind his authority, which will obviously help him a lot on finding new loads and signing up with Amazon, or the ones that require 3 to 6 months or even more months with operational history. In another video, if you want, I just don't want to make this one too long. I'll tell you what is your option if you really want to shut it down. It's really not that difficult, and sometimes it's the right thing to do. I'm just trying to keep this video really short. I don't have too much time. And the other story was of a customer that basically he's been with us for a year. He has like a great safety, right? And we were expecting a really competitive renewal from his current carrier, or if not from the current carrier, from other carriers. The renewal was decent, although we expected better. And the reason was he got a hit on his credit for some, I mean, it's kind of absurd reason, but it is what it is. That's what all insurance companies are looking at when you are signing up for a new policy or for the renewal. That's a big factor to them, and we've discussed that in a previous video, determining your rate. They're really looking at your credit standing, if it's strong or not, and that's a big factor in them determining the price. I mean, in his case, you know, we discussed like options like paying full and a couple of other discounts that might be possible. So his renewal will be pretty close to what he was paying for the first year. But his main concern was really towards like February or March, something along the lines, where there is not so much freight and so much cargo. But at that point, what we'll have to do is basically, since he's not really going to be operating, to maintain his authority and to maintain his policy, we're just gonna get down his coverages to the bare minimum to meet the FMCSA requirements. And then once this way, he can take some time off and enjoy himself after the season and the hard work he has put in. And then after things like start going again on the market, we'll just put things back the way they were. So this way he can meet the broker requirements and of course have the adequate coverage to actually move the truck and operate, not just what's required by the FMCSA. So I just wanted to share those two stories with you guys real quick, and I'll see you probably in a couple of days in another video. I hope this helps. I'll keep giving you all the insights we see, talking to literally hundreds of trackers every month. I'll talk to you later. Have a good day and stay safe out there.